Good evening and welcome back to our discussion. Sometime back we discussed a concept called economic value added, how is it calculated and how different it is from the normal accounting profits. But in today's session, we would like to discuss how business decisions will affect the economic value added and how EVA can be managed. We know that EVA is a comprehensive measure, so it can be managed by managing operating decisions, by managing investment decisions and by managing financing decision. But as I mentioned, the focus is to understand some specific business decisions and their effect on the EVA. For that, I am taking a very simple balance sheet having the normal items of the sources and assets. The profit after tax is about 52,500, and for the calculation of EVA, I am assuming the cost of equity to be 20%. So, as we know, the EVA is a NOPAT minus the capital charge. So, therefore, the NOPAT is an adjusted PAT for interest. So, therefore, the NOPAT in this question is 56,000 and the corresponding capital charge is 53,000. So, EVA is 2,500. We want to understand, will this EVA change if we take some specific business decision? Let us take some decision. If the company declares stock dividend, will the EVA change? The stock dividend is a conversion of reserves into capital. So, therefore, in principle, EVA will not change. Why? Because there is no change in equity, only a conversion of reserves into the capital. So, no change in the equity. So, the capital charge remaining constant, the NOPAT remaining constant. So, EVA will not change. So, stock dividend, all other things remaining constant, will not change EVA. But what will happen if this, instead of stock dividend, if the company declares cash dividend? For example, in this case, suppose 50,000 is declared as a cash dividend. Why 50,000? Let me show you that in the balance sheet we have 50,000. So, company can declare dividend in the form of cash 50, and there is a huge reserve sitting on the balance sheet. So, what will happen if the company declares cash dividend? There is every possibility the cash dividend will affect the EVA, but how? In this case, equity reduces, the capital employed reduces, and since equity reduces, the capital charge will reduce and all other things remaining constant, the EVA will increase. So, on one hand, the stock dividend will not change EVA, but cash dividend will increase the EVA because the equity reduces, and we know that the cost of equity is greater than the cost of the debt. Which continuing the same example, when equity reduces, your equity is no more 250,000, it reduces to 200,000, bonds remaining same, NOPAT remaining same, your capital charge reduces, so EVA is increasing by 10,000. Let us take one more decision. If the company converts the bonds into capital, that means a low cost sources is converted to high cost source. In that case also, the bonds will reduce, equity will go up, though the capital employed may be remaining constant, the composition of the capital employed changes. So, conversion will lead to the reduction of EVA because higher of the cost of equity. You can see that there is no more bond, entire bond converted to equity. So, the capital charge goes up, NOPAT is remains same. So, the EVA has actually become negative. So, if the change in a capital because of the conversion will lead to the increase in equity, which is high costly money, so EVA falls. What will happen if the company collects debtors? The company has a huge debtors on the balance sheet. You can see that there is a huge debtor sitting on the balance sheet, about 40% of that. So, will EVA change if the company converts that, collects that debtor? The answer is no, if the cash is kept idle. If the cash is kept idle, then there is no change in the NOPAT, no change in the capital employed, so therefore no EVA change. However, if the cash collected is used for some purpose to pay off debts, then yes, EVA will change. If the cash collected is used for reduction of equity in the form of payment of dividend or buyback, In that case also EVA changes, because the decrease in equity, decrease in capital charge, and EVA will change. In other words, EVA will increase. So that means some of the business decisions will affect the EVA and some will not affect the EVA, but the which one will affect or will not affect depend on the impact of that decision on the changes in the net operating profit after tax, the impact of the decision on the weighted average cost of the capital, the impact of the decision on the capital employed. For example, the change of the conversion of reserves to capital will not change equity, will not change debt equity, will not change WACC, so no change on the EVA. But if the creation of cash by converting debtors into cash will increase the cash flow, but if the cash is not used, no EVA change. But if the cash is used to pay off debt, EVA changes. If the cash is used to pay off equity, the EVA will change. So to a large extent, it depends on the impact of the released resource, the impact on the cost of the money, and impact on the ability of the asset to generate the cash flows. Therefore, it is very much essential, very much needed to understand the impact of the business decisions on EVA. Or in other words, by managing EVA, it is possible to understand the effect of the operating decisions, to understand the effect of the financing decision, and understand the effect of the investment decision. Like that, there can be many other questions. Will EVA change if there is a change in the debt equity? Will the increase in sales increase the EVA? Will the sale of assets increase the EVA? Are some other questions which we will pick up in our next session. Thank you very much.